Well, now that the midterm elections are over here in this November of 2010, our guest is here today to talk about how that's going to affect the stock market and the markets in general, Dr. Leonard Goodall. Dr. Goodall, thanks for being here.
Thank you.
All right, so now that the elections are done, how do you think long-term it'll affect the markets?
I think long-term it'll have a generally positive effect. The short-term is probably going to be positive also because you had the outcomes that many people wanted in the midterm elections. So I think that over the next several months you should see modest upward pressure on the market because of that.
Now, we hear a lot now about quantitative easing too. What's your thoughts on that and how that may affect going forward?
Well, quantitative easing is the policy the Federal Reserve is following of pushing a huge amount of money over the next 6 to 9 months into the economy by buying bonds, buying treasuries, and then having that money flow into the economy. There's been a lot of criticism of that, certainly from overseas central banks as well as domestically. I think it is designed to have a positive impact on the market. In fact, that's what Bernanke says, that he wants asset values to be increased, and therefore people will have a wealth effect. They'll feel wealthier. They'll be more willing to spend to invest. Now, there's a lot of criticism that says that shouldn't be the job of the Fed. It's not the Fed's job to push the stock market up. But I think he is determined to have at least some positive impact over the next several months. So I would say that the Fed's impact over the next, say, to mid-late 2011 will be generally to push the market slightly upward, and that'll not be the only thing, of course. You'll have to look at earnings, a lot of other things, but the Fed impact will be a slightly positive one.
Does that then argue for a greater portion of my portfolio in equities going forward?
If you're willing to take some risk, yes. The Fed is not the only impact on your portfolio, but I would say over the next year or so, I would not be afraid to gradually increase my holdings in the stocks and equities.
All right, the downside of this quantitative easing, what should investors be worried about there?
Well, the downside obviously is that if you pour enough money into the economy, the inevitable impact is going to be that you're going to have inflation. The immediate impact was to see upward pressure on prices in oil and in gold. And over the long pull, it may flow into other areas. And that's why I would say if I were watching that over the long pull, I'd watch interest rates very carefully. If I saw them begin to tick up, I would reduce my holdings in equities, and I would probably look at something like inflation-protected bonds for a portion of my portfolio. That is a kind of instrument we have available today. We ought to use it in this kind of environment.
The tips, as
tips, that's right. Mm-hmm.
Dr. Goodall, thanks for your time.
Thank you.